Attendees are in listen-only mode.
A very good morning to everyone. Welcome to our live trading room here at Admiral Markets. Glad that you could join us on Tuesday, the 27th of August. We're going to take a look at the charts in just a second, but as you know, I have to take a look at this risk disclaimer, of course, explaining you that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. So I do thank you for your attention on that. And once again, we welcome you to our live trading room. Admiral Markets today, Tuesday, we are going to take a look at swing trading, which means more long-term vision here, 1 hour, 4 hour charts. Wednesday we'll do a mix of both, and Thursday we'll focus on intraday trading. So if you are interested in intraday trading, please join us on Thursday, but I do hope that everyone will enjoy this session. Today, yesterday we actually had an educational topic explained by Nennet, and Thursday we will look at, I think it's range trading, if it's correct. It's an educational topic on Thursdays, as always, okay? Trading my own money, you will see me doing that today, and then we'll take a look at breakout strategies especially, and we'll have, of course, advising you to take a look at Facebook and Twitter regarding Admiral Markets. I just want to check if today we have Michal on board. Michal, are you there?
Yes, good afternoon, everybody. Good afternoon, Chris. Thank you very much for this lovely introduction. I'll now take over for 5 minutes from you, if you don't mind, of course. I'm just going to change the presentation mode to my screen. Thank you very much. And I hope we're not going to have any screen problem this time. We had a little bit of a technical issue yesterday. Good afternoon or good morning to everybody who's listening to this webinar right now and who's watching, of course. My name is Michal, and I'm a client relationship manager at Admiral Markets. In essence, my main job is to make the best trading environment for you. Here is my email, phone number, and Skype. You can always Google my name and find me on LinkedIn and add me there as well. I'll be very happy to accept your invitation to connect. I've been watching the numbers for both webinars and live sessions, and both of those numbers have been on the rise lately. It is very, very nice to see that. Not only do we have participants that are currently trading with Admiral Markets, we also have people who are yet to make their first trade who are attending those webinars on the constant basis. And of course, we also have traders who are currently trading with other brokers. I extend my warmest welcome to all of you. I hope you're going to enjoy the second part of the webinar. And I have a little bit of educational material for you as well today for those 5 minutes. I will talk to you about the correct ways to choose the right broker. Now, that all brings me to the point I wanted to make. What do we do to choose one broker over the other? What sets apart one broker from the rest? There are a number of factors you're considering before you make a decision. I'm talking about, of course, about spread, about the platform, various deposit methods, variety of account types, and of course the variety of instruments that you can trade. You choose the factors most important to you and you make an informed decision. But of course, none of those factors matter if the key factor is missing. I'm talking, of course, about trust. No matter how great the conditions are, I don't think it means anything at all if you do not trust the broker you're working with. In fact, none of those factors even exist if you do not trust the broker who advertises them. Investment is a very difficult area of your life, and you must be sure that there is a reward waiting for you when you make to the other side. If a broker with a dodgy reputation advertised a 1 pip maximum spread, would you believe him? No. Most likely the spreads are higher, and even if they were that low, you would not probably be able to withdraw your profits. You see, the trust is the main factor, the most important of all the criteria. Trust, of course, has been a critical issue for the past few years. I'm pretty sure all of you would agree that it's been the most critical issue in the financial sector. And if you would never buy a product from eBay if the seller had, say, for instance, less than 100% positive feedback, why would you settle for less when it comes to the broker? After all, you entrust the broker with a substantial funds, and the level of trust should also be substantial. So, how do you choose a trustworthy broker? As most of you have probably noticed, there is not a single place on the internet that will present you with 100% accurate data. And more often than not, brokers' ratings really depend on the amount of money said broker is willing to pay to the website. So here are a few things to look at. A few tips you should consider when you are about to choose a correct broker. First off, in the financial world, there's always someone watching. I'm talking about, of course, the regulators in this particular instance. Take a look at this picture. In order to receive your license, you must comply with strict regulations. And Admiral Markets have done so in many regions of the world on a variety of continents. Admiral Markets, for example, is licensed by European Union by EFCA, and we have obtained a passport from MiFID. Admiral Markets has recently received an FCA license in the United Kingdom and has been authorized by Australian Financial Service License for a number of years. Being licensed, of course, is important, but Admiral Markets is not the only broker that is highly regulated. We're not the only broker who is authorized on many continents as well. There's some other brokers just like that. This is why it was absolutely essential for us to go a bit further. And we have decided that in the Facebook era, we must establish a personal relationship with all of our clients. Rather than sharing a transaction, we want to establish a personal relationship with our clients. Our policy is to provide a personal account manager to each of our customers. Each customer gets a personal account manager. And if you have a real account with us, if you have a demo account, or you participate in Forex Bowl, there is a person in our company that can help you in your own language. Not a member of the support team, an actual person that is responsible for your account from the time you register in the company to the time you decided to make a huge withdrawal. In essence, our size is like this, a size of a huge shopping mall. We have 40 offices all over the world, and we are a huge company, but our customer support and customer attention is more like this. It's more of a, family-owned butchers or hairdressers that have been known you for the past 15 years. This is a standard of customer service we try to achieve. Personal and friendly. I would say that I'm a great example. I work with customers in UK and Ireland, and if you're watching this webinar from one of those countries, chances are me and you have already spoken. At the start of the presentation, I have shared my email and phone with you. Here's also my Skype and LinkedIn. From the start of this webinar, I already have about 4 invitations to connect on Skype, so I'm hoping to get at least 6 more to get an even number. Don't forget LinkedIn as well. It's quite a useful social network. All of our customer relationship managers who are working in Admiral Markets, by the way, would be very happy to do the same. So we at Admiral Markets believe that in the modern era, trust is the main virtual currency. We conduct our business in an open and friendly manner, and before we get your business, we are ready to establish a relationship with you. So once you feel we have won your trust, you can register an account, only to find that our spreads on major peers is as low as 1 pip. We offer MetaTrader 4 and 5-star platforms. We accept bank transfers, wire payments, card payments, and Skrill. And we give you a variety of accounts to choose from, standard, professional, all sorts of managed accounts, of course special CFD account there as well. And you can register an account today and meet your personal account manager in just a few hours. To him, you will always be a #1 most important client. So once again, if you have any questions, please write me an email, Skype me, or call me. If you want to add me on LinkedIn, I will gladly accept your invitations. I hope you had a great time listening to this. I know it hasn't been as complex as something Chris is going to share with you in just a minute, but I really hope that you enjoyed it. After all, I give you some very good advice, so follow them, please. And I will now pass the microphone to Chris, who will continue with a live webinar session. Thank you all for your attention, and have a good week.
Thank you so much, Micha. I actually just added you on Skype.
Thank you very much.
So to work on the example here and to get you to the 10. Thank you for a great webinar explanation, Micha. Thank you so much. Hope to see you tomorrow again. We're going to take a look at our Forex calendar first of all, and then we're going to take a look at the charts. So what do we have in 1 hour? We have Euro German IFO Business Climate Index, which has a high impact. So something we should be aware of with regard to the euro, and later on the USD, some consumer confidence there. So let's head over to the charts. I'll pull this over here and go to our euro dollar first of all. So euro dollar, very complex corrections it's making. Not something that's on my watch list for today, to be honest, because if you look at where we broke this bull flag that I just took away, as you can see, that is broken. But in the meantime, we're building a new structure. We're building something of a triangle like this, which is actually breaking to the downside. But if anything, if there is any direction, of course, it's to the upside, as you can see clearly. So nothing as yet really that very interesting. If you look at the supports right around the corner at 133.50 and 133.30 and 133, it's like equivalent of playing football in a minefield, because there's a booby trap at every corner. There's really a lot of danger when trading this euro dollar. There is no movement, there's no momentum, it's going sideways. From a swing trade perspective, there's not space, there's no wide open space that we can trade it. All right, there's no space here. In swing trading, we're preferably looking for a trend and trading it with the trend. Those are the best reward to risks. Now, of course, there are spots where you can take trend reversals, and there's good reward to risks as well. I'm not saying there's never an opportunity like that, but more often would it occur within a trend. Eurodollar has a slight uptrend, but it's very choppy, very corrective upwards movement. Right now it's another triangle. If anything, there could be an intraday, maybe a scalp within this for a few pips. Yes, that's possible. But here we're looking for sustainable, larger movements within our swing trade session. So we're going to look at something else, or I suggest to look at something else. If you do see something interesting on this Eurodollar, I mean, feel free to send me a message and we can take a look at that. If you say, hey, Chris, what do you think of this swing trade? By all means, I'm all ears, but I don't see it at the moment, personally. Okay. If you see this daily chart, they're just, wait, let me go. I see that I have the wrong account open. You just see a ton of red and green lines here, indicating a lot of levels that need to be broken. Okay, maybe above 134 if there's some motion, or below 133. But otherwise, I would say let's move on to the pound dollar. Pound dollar had a very, very bearish week last week. A lot of downside momentum, and if anything, I would, I see the validity of the pound dollar making at least one more downside, at least towards the. Sorry about that. Just give me 1 second. I forgot my drawing tool this morning. I could see the validity of basically the pound dollar going back to this bottom of the black line here, this black trend line. That's what I wanted to point out too. All right, because last week was such a bearish reversal with such a momentum that a move like that could happen. You can see this theme and the power behind it. Just looking at price action here, the fall, the break of the rising wedge, passive sideways. So a break of 155.40 and last week's low could indicate that weakness, and we're about 5 pips away from there. So we're getting very close to that level. Yes, my drawing tool is working now. So that's what I was talking about. And maybe if we break that, more continuation to the downside. That's something that could make sense in my opinion. So let's take a look at the daily chart quickly. Yesterday was a very small day. Nothing happened there. Let's take a look at the 1 hour. Of course, yesterday was a public holiday in the UK as well. That explained a lot of quietness in the market during the day, during the London day. But we did have some movement at later New York on the pound odd, euro odd, odd dollar. Those were really great breaks. I was sleeping, but if you do trade those times, those were really great breaks. Those are classical breakout swing trades. So let's see if this bottom can break. We'll come back to the pound and analyze that. If we, for example, make a break and hook back or a bear flag, those are interesting situations. You could put a top line on this as well, indicating the top of the triangle. Okay, so let's take a look at the pound dollar a bit later and see what it does here right at the bottom. Let's go to something else like maybe the euro CAD and dollar Swiss we can take a look at. I'm just going to take a look at one by one and see if there's a swing trade that is interesting. Okay, euro CAD definitely interests me, just like pound CAD and dollar CAD. Those are just basically continuation trades of last week because, as you probably know, we were looking at CAD and odd weakness last week. And those CAD weakness and odd weakness, well, odd weakness we already had yesterday, but we can still catch the pullback. I'll talk about that in a second. Because if you look at the market from a global, like from a bigger perspective, let me start with that. Let me draw that here. We had basically CAD and odd weakness. Then we had, I think that we could have Kiwi, maybe it could be new weakness coming up. Euro is just stuck in a sideways chop. And then we're going to be interesting regarding the dollar. It's going to be interesting to see what happens with the GU and the dollar Swiss. Also the euro in less manner, but it's just stuck in a sideways chop. What the dollar does against those. Are we going to see bigger retracements or are we going to see reversals? That's still a question mark there. So for me, the best opportunities are within these three, capitalizing on those, because the majors are really stuck in unclear territory, very simply put. Okay. We saw, for example, gold go up a lot. People say because of geopolitical insecurity in the world. We saw oil go up. So there could be some factors besides, the currency market at the moment. Greece maybe. There are other factors that could be playing a role with the dollar and the sideways movement that it makes. So who knows? We'll have to see how much of that proves to be true and how much the technicals will kick in or work. But that's why I'm a bit careful maybe with the dollar in general. But also just technically speaking, it is at a decision point, bigger retrace or bigger reversals. Alrighty. Back to the euro CAD. We have a 4-hour resistance right in here. If that breaks, that could be a good setup, I think, for continuation. You can see we're breaking out as we speak on this euro CAD. I like the long potential here. It had a tremendous upside. Look at that power. All right. Any retrace we'll probably see one more continuation, right? Just based on our AO strategy that maybe you know. If you don't, there was a webinar on that. Take a look at intra-week and volume strategy webinar at Admiral Markets webinars, okay? You can see the AO is very strong here. A break of this top is very likely. And that's why so many people who are focusing on reversal trades lose, right? That's why they lose, okay? Because they're not picking, they're trying to pick a top and bottom, but not aware where to do that. Anyhow, it's difficult, even if you have experience in it. All right. And by trying to pick the reversal, you totally lose focus on with the trend trade. All right? Let's see. Darshan is asking why the EJ fell so much. We'll take a look at the EJ in a second. I wasn't that interested in the yen pairs, but we'll take a look at that. Okay, Darshan? Alrighty. So let's take a look more closely at this, still at the Euro CAD. It's on the move right now, a bit late with that. Let's see. I think if it hooks back somewhere in here, maybe a break and a hook back, that would be the best probably. Yeah, if this top gets broken, I'll wait for a hook back. Let's see, 1 hour candle. Somewhere back to this 50-minute fractal with a stop loss, probably somewhere in here or here. Let me take a look. Yeah, probably the lower one here, because that's a 1 hour fractal as well. You see, the benefit of that is that we have a 1 hour world, 1 hour world fractal as well as support, okay? So that gives extra confidence. And if we have a potential to put a stop loss where there's a bigger stop loss, I mean a more secure stop loss where there's extra support from a higher time frame, then that is beneficial. And if the difference is only a few pips, which really makes the reward to risk only a tad worse, then I think it's beneficial to have that trade-off. Does everyone follow me on that one? You see what I mean with that? So those of you who are multitasking and weren't looking, not here, the stop loss, but at the blue line. Okay, that's also a 1 hour fractal. The red one is a 50-minute fractal. If we move it to the blue line, it's only a few pips lower, but we have 1 hour support as well as a stop loss. Does that make sense? Waiting for some feedback here. Does anyone understand what I mean here? Yes. Yes, it is, Dennis. Okay, I got some feedback from Mac. Great. Anyone else want to confirm that? Because I want to make sure that everyone follows here and understands this. And I need a few more yeses because one is not enough. There should be more understanding here, or if not, let me know what. Okay, great, great, great. You know, because I need to, Rich doesn't, no problem. The advantage of this level as a stop loss compared to the blue level. The red level has the advantage that it's not only a 15-minute bottom, but a 1-hour fractal as well. If you can zoom out one time frame and find more confluence, while the difference between the closest 15 and closest 1-hour fractal is only a few pips, then I would choose the more wider one because the stop loss is safer there. There's more support between price and our stop loss. That's always good. The more barriers, the less likely price will actually hit our stop loss. And if the difference, of course, is mega big, it's not worth those extra pips. But if the difference is only a few pips, then the slightly reduced reward to risk is okay because we have a safer stop loss. In this case, it's only a few pips. That's fine. It will depend on case to case. If this would have been a 50 pip difference, well, logically, I would use the tighter stop loss. Okay, so I'm not looking for shorts, as I said. I personally advocate looking for with the trend trades because I have tons of examples of people shorting the pound odd and getting massively trapped by this up move, which is logical because we're in an uptrend, and uptrends do not change on a dime, all right? And I know that all our minds are geared towards catching reversals. Why is that so? Because maybe some of you didn't catch this trade, and you regret missing those pips. And you think, how can I still join? I'll take the other side. I think it's almost like so many traders, I don't know, it's so difficult to focus. It seems to me that it's so difficult to focus on with the trend, maybe because it seems easy, but in fact isn't. I don't know what it is. But with working with traders, I have noticed this so many times that it's so difficult for them to see that. And I think it has to do a bit with the psychology of maybe missing that move and regretting that. But we have to realize that it's not about the pips we've missed, but always on how much we can try to catch in the future. By focusing on what we've missed, we're only going to create emotions within us, and emotions will actually kill our trading. Definitely not help it, as you are probably well aware of. With the trend focus, would have seen this break right in here, or try to catch an early reversal at the bottom here, which is more risky though, at the blue trend line, or the blue circle is more confirmed. Why is that so? Well, what do you think price is doing right now? All right. Now, I'm not saying that every single reversal trade is bad, because we talked about counter trend trading in Thursday's webinar. But it just takes that experience and knowledge of the currency to know when to do that and when your take profit is. Because your take profit is either going to be, it's a tricky matter, either you're going to aim for the total reversal or you're going to aim for the next support, or you can do both. But it is more tricky to know that. My target would be, I would probably, let's take a look at the fibs here. Well, I'm waiting for the break of that level first, and then I will put that entry order. But I'm going to take a quick look at by the way, at the dollar CAD and pound CAD as well, because I want to take a look which of those three could be better. And then we'll take a look at the odds, because I have some ideas regarding entries on the odds as well. But those are less urgent, so I think the CADs are more urgent, so I wanted to start with those personally. So this looks like one wave here. Let's see. If we use a conservative fib, which is this one. So by the way, just to go back to the feedback here, does that make sense, Rich and Mohammed, regarding that stop loss? If you have any follow-up questions, please let me know, okay? And you can see if we fib this move, because if we use the oscillator as a guidance, we can see that this is one move up. We have the green circles, the blue circles are one move up, and now the red circle is one move up. Those are legs that belong to each other. So if we fib those legs that belong to each other, we do see that there's 5 waves within that. So that's maybe one alarm bell that we should be cautious. But the target traditionally would be any of these fib targets. If you look back at the move up move, for example here, look, 50 fib smashes through those targets right to the 1618. That's what we can expect with the wave 1. If we fib wave 3, it just a bit shy of the -618. That sometimes can happen. So the conservative target is the -272. That is 141.70. All right. Let's see. 171.70, I think I said. 141.70. About 90 pips if it breaks. We'll wait for a hook back. So about 100 pips. Versus a 20 risk. That's a 5-to-1. The more safer stop loss would actually be here. Even lower, not even below the 50-minute, but the 1-hour stop loss right there. That would be more of a, let's see, 40 pip. That would be a 40 pip stop loss, but we have a 100 target, so it's still a 2.5-to-1. The stop loss I just mentioned 2 minutes ago was a 5-to-1, but compared to this stop loss, is riskier than the lower one. So let me lay it out to you here. We'll go to the 15-minute world. We had a 50 fib bounce. So we have the chance here to put our stop loss at the red vertical line for a 2.5-to-1 R2R, or here with a 5-to-1 R2R. But of course the 2.5-to-1 is going to have a higher probability of making it than the 5-to-1. Is it twice as much? That's the question. So maybe I'll split the trade in 2 parts, this one, and I'll attempt both of them. It's up to you which one you think is, which one you feel more comfortable with. Well, it looks like we're breaking that level as we speak. Now if we zoom into the 4-hour world, you can see that this is still just one movement up. There hasn't been a full retrace to the 0 line. And we have very bullish price action. The fib parameters, no problem. Let's take a look at that. You right click on the fib. No, you left click, then you right click, go to fib properties, okay? And what I add is minus numbers. Minus 0272, minus 0.0 0.618. Minus 1,000. Minus 1,618. Minus 1,272. They're all here. Now we have, no, we don't have the fib webinar, I think, but anyhow, I use minus numbers because it's just an easy way to combine the targets and retracements in one tool. I don't need two tools. I need only one. I just need the fib retracements, and I see the retracements and the targets in one tool. So that's, if you need those numbers, minus 272, minus 618, minus 1,000, minus 1,618. Those are the most important ones. Okay? So let's take a quick look at the dollar CAD and pound CAD. Yeah, no problem. I think personally those are really valuable numbers. So I mean, I paid money for that, so those I think are really, really, really good way to search for targets. But you know, I'm not saying that this is the only way for targets. You know, there are plenty of other ways to search for targets. But I definitely was very happy with that purchase, because to me it really works very well, and I've never changed ever since that. This is, let's see, this is the dollar CAD. Same story here basically. So we'll have to take a look at the euro dollar to see which of the two is better, euro CAD or dollar CAD. What I liked about the euro CAD is the massive weekly candle. Dollar CAD has that too, but there's a bit of a more wick. I know it's just a very marginal difference though. Otherwise, they're quite identical. Let me take a look at the pound CAD, if I can find it. Yeah, right in here. Pound CAD has a bigger wick. And the thing with the pound CAD is that it is right at this major weekly resistance. So I don't think that weekly resistance will necessarily turn it around right in here. But it's still good to be cautious. And maybe if we have a preference between those, the euro CAD, pound CAD, dollar CAD, then the choice is more leaning then towards the euro CAD. Here too we have some triangle going on. If you connect the tops and bottoms, do you see that? The bottom of the triangle, if you look at that, you can see that that too is maybe a neckline, right? I'm sure some of you are seeing this because some of you are very geared towards the head and shoulders pattern, which is fine. There's nothing wrong with that. But mind you, even if we break the neckline, we are smashing into support right away. And that could be the turning spot. You see that? There's the zone right in here. Right to the left, this zone. I'm talking about this zone here. That could be support. Or these tops in here, okay? Both levels could be major supports for one more up move. Now we do have divergence between these tops. So that's why there's another reason to be more cautious with the pound CAD. That's the 4-hour. 4-hour divergence could be important. Maybe we should take a look at the euro CAD just in case. Does that have divergence? No, it doesn't. See, there's a difference there. That also has to do with the fact that maybe the euro pound, right? Euro pound has been moving up recently and is moving up now. Actually, I had it on my list, this triangle, but it broke already. Too many things to look at. Anyhow, I'm not a big fan of the euro pound, so that's okay. You can see it broke the resistance right in here, hooked back to it. Now moving up. So the euro pound is looking more bullish. That's another reason why we should probably focus on euro CAD and not pound CAD. Let's take a look at the euro dollar. Dollar, as I said, look, bounced right at that 133.50, stuck in a range. Right? So euro and dollar CAD are probably equal to each other. So what's happening with our euro CAD? Did it break? Not yet. It's attempting to. Let's keep an eye on it. Let's move to something else. You must be bored of this euro CAD in the meantime. Let's take a look at euro yen for Darshan. Darshan, let's take a look here. And then we'll head over to the odd, because I see some trades on the odd that could be interesting, and in New Zealand. So those are the most interesting opportunities, I think, personally, in the New Zealand, the odd, the CAD. So the New Zealand and the odd, I don't think are going to happen within our session. So it's more like I'm just going to share with you. Well, maybe we'll see, but I'll just share with you at least how I'm going to trade it. And the CAD is something that really could happen soon. So let's see. Anyhow, first I first want to show Darshan is euro yen. My thoughts of it, at least. In general, by the way, please feel free to ask any questions. Right? I failed to mention that during our sessions, but let me just clean up the chart a bit here. Looks like the euro yen stopped at that resistance level. Darshan, looks like if you look at the fact that it stopped at 132.50 and the next daily resistance was at 132.70, you see that here? Tops and bottoms like that, you know, it is tough to crack those. It is really difficult. And despite the upward momentum, it was getting close to that resistance, couldn't break it. We get a rejection off that level. So we could see a fall maybe back to the bottom of this triangle. We're stuck in this triangle, as you can see the black lines there. You expected support at 130.50? Yeah, that's possible, I guess. Let me take a look what you have there. Yeah, that's like the broken tops here. That makes sense. We have to see, because you know the thing is, why I still want to be careful with that. I mean, the reasoning is very good and logical. Okay, nothing wrong with that. These levels usually are support. The only thing I would like to advise, or not, warn you for, I should say, is the fact that also we're at the bottom of this blue trend channel. Right, so we broke those tops. We're at the bottom of the blue trend. All good things. AO is strong, but the only thing is that the psychology of the trades could be a bit different here because of the fact that we're in a triangle here. So when those levels break, it could happen that you're bouncing here from one end to another. So instead of what you're looking for is this, it might be a different environment where we're not trending but ranging, and then we could see a breakdown to the bottom of the triangle. It's possible. Will it happen? I don't know. We have to see. But just to give you my feedback that those resistances becoming support in the future, right? You know what I mean? Resistance here becoming, of course you do when I'm checking with others, becoming support in the future. works well in a trending mode, but is dangerous if you're in a triangle range like that, because those intermediate mid-levels could give bounces, but price could, the traders see the opportunity to trade it from one end to another, from one range to another, and that could crack because of that. So I hope that makes sense. If anything, I would not take an entry based on these levels, but look for a breakout trade, a breakout of that bull flag here, for example. You can draw a correction trend line here or like this and wait for a break. Adrian has some good feedback, by the way, folks, is that if you look at the triangle, let's see, I think probably this is an A. Let me do that. B. This looks like a C. This is the D of that triangle, so we're going down for the E. That's great analysis from Adrian. Thank you so much for that contribution. So, that's definitely, thanks for that, Adrian. That's great stuff. That's indeed aiding the fact that this could be going down for E, and then we bounce up and break when we finish that triangle. So something to look for. Okay, that would be very interesting, because the euro yen could make a continuation of that massive uptrend here, like that. And maybe when the Bank of Japan decides to weaken its currency even more, that could fuel this continuation. Let's see. Okay, Darshan was thinking about 131.54. Yeah, this level, right? No, 131.54. This level, yeah. Yeah, it looks like a bull flag. Probably is. It's just the bull flag happened right at the top of a triangle. That's just the only thing. Otherwise, it wasn't in a range environment. That's the thing. Let's take a look at the pound yen. Yeah, pound yen as well. Daily doji, or actually a daily pin bar, excuse me. That's a massive reversal sign. That was a good short if anyone took it upon the retracement of that candle. That was a nice one, because not only was that a pin bar, but it was a pin bar right at resistance, right at the top at 154. So yeah, that could. We'll have to see. There's still some support around 151.70, but if that cracks and breaks, then you can see the space down towards 150, 149. So we'll have to see. We're too close to the daily support still here, but looks like a range environment as well. Let's take a look at the trades I'm keeping an eye on this today. Oh, nice job, Mac. Awesome trading. Great job. For those of you who, if anyone's interested in a pin bar strategy, let me know, okay? We'll talk about it a bit later. Okay, I got some yeses, so we'll take a look at that, okay? Well, I'll just, so I don't bore the others too much with that, I'll talk about it at the end, okay? Let's see, the odd USD. Alrighty, let me go to the 4-hour chart. Alrighty, we had this massive correction here. Broke that correction right in here where I have the red circle. Fell nicely down to the 786 fib support. Made a bull flag, and now breaking again. very bearish. Now there is something, of course, we want to be smart with the trend traders, not naive with the trend traders. So we do want to know where is support. 786 has been already taken out. We bounce off that, so the next support will be 886, although the 786 is still a bottom, of course. So we can put green lines here. And if we break those green lines, then we're most likely heading towards the minus 272 target. At minimum at 87, but probably at minimum, I would say the minus 618 around 85 level. Okay, we can even put a fib on the daily move here. 1 second. Right about here, and there's another minus 618. So a fall to 85, 50, 300 pips here is a trade that's very juicy. Now there's not much space in here, although it's very bearish. Just, you can see, using support and resistances, trend definitions, trend lines, and an oscillator, and you can dissect and understand the structure of the currency. I just want to emphasize this. I don't want to go on for a 10-minute lecture here, but does everyone understand what I mean with structure of the currency? If you can see the structure, you really don't need specific strategy rules with oscillators, like if the oversold is there and that is there, because you understand what the market is doing. Yes, Adrian, definitely. So does anyone understand what I mean with structure of the market? Impulse correction. If you can see that, you will always be able to trade the Forex, because this is the DNA of Forex movement. Great, perfect. Dennis understands. Great. Adrian says if we break the 3 lines and the stop loss would be big. Yeah, I'm not sorry for that confusion. I'm not looking for an entry based immediately upon the break of those lines. I should have mentioned that. I am looking for a break and then a bull flag, bear flag, and then a continuation with an entry here or here. In fact, I'm looking for an entry even earlier than that. That's later on. That's the biggest, like, wide open space there is, I think. I'm looking for an entry earlier on that, and that's based upon this. This fib here. Does everyone see that? So to me, that looks like a good break, and a pullback seems destined for more continuation. Now, how do we want to trade that pullback? One way is putting an entry order right there. One way is waiting for price action and candlestick confirmations at those fibs. Depends how confident you feel in this pullback. Me, myself, I'm even contemplating an entry order, because to me it looks very bearish. A good break of the bull flag, a bear flag. But price, waiting for confirmation is never never invalid or ill-advised to do. So that's a more near-term setup, right? Now, when we do break when we do break those green lines, support lines, then we could look for more shorts upon pullbacks and breaks, and there's a lot of space. Until we break those green lines, There's a bit more risk on the Aussie just because of the fact that we are closer to support and we could get a bounce there. We are close to those green lines. Those are support levels. You never know. Despite the downtrend, you know that once we're in a trend and we get close to major support or resistances, the trend is less, could weaken, and we could see bigger retracements. Ashraf, what do you mean with the, was there an incorrect time posted on the YouTube channel? Is that what you mean, Ashraf? Or Raj, is that you? Oh, okay. I'm not sure if we actually post these live trading sessions on YouTube. We do? Let me know, okay? Anyhow, so that's because we're, there's no emergency, or because before we pull up to the 50 fib, I will take some time, I think. Let's take a look at Euro odd. Euro odd is breaking out of this triangle, but it broke out a few hours, 6 hours ago. I was sleeping, unfortunately. Okay, Ashraf. Okay, I could ask that. I don't think that's a usual practice that they upload it to YouTube, that's why. But you didn't, the only thing I said really, I'll just make you a quick summary, is that the euro is stuck in a triangle. Pound could have reversal signals, just like dollar, Swissy, but it could be a bigger retracement as well. And otherwise, I'm basically interested in CAD, odd, and New Zealand. If that helps, let me know. Otherwise, I can ask that. So this euro odd, continuing. It's just a, how do you say it? It's the opposite of the odd, of course. We're here close to resistance instead of support. We're close to but in an uptrend, and we're breaking out of that continuation triangle. You see that? Upside, triangle, upside. All right? We don't need any fancy tools. We don't need any green and red indicators saying buy here, sell that, or green or red dots. You don't need that stuff. You just need to look at the pattern of the market. Up, correction, up, be careful of resistance. The currency has a roadmap, is showing a roadmap how to trade every single time. It's just for us how to interpret it. Alrighty. So here too, a hook back, anyhow, a hook back, potential for upside, just like the pound odd, but the pound we know is a bit weaker than the others, so maybe euro odd or the odd dollar are better. Regarding the pound, the euro and pound New Zealand, let's see. Well, the reason why I like these, and I'll probably take all the tools off here. The reason why I like this one is that I wouldn't want to trade it now because we're right at the top. But you can see if we break that top, this is an old-fashioned sideways box after an impulse. We can measure the distance, and we see it's 1,500 pips. If we add 1,500 to the bottom here, 177 is the target at minimum if we break that resistance. The blue line is the target. That is well before actually the next weekly resistance at 181. isn't it? So there is that gap right in here if we break the top. Does everyone see that? Also, if you put a fib on this, you can see 382 pounds. Where's the 272 target? Right at that blue line, because those are equal, right? So we have two targets at that same spot. So I'm interested in a break of this, but I'm only interested, of course, I'm not trading the weekly. That's just the analysis. I'm looking back at the 1 hour chart, and if we break this top, wait, where is it? If we break that top, make a pullback, and go, that's could be massive upside. Okay, so we'll have to see. We had a break earlier here. If anyone caught that, good job. You're doing well. You're up, I don't know, 100 pips, maybe more. And hang in there and hope for a break, or take your profit right at the top. Right there. So that's something interesting. The same is true for the New Zealand dollar and the pound New Zealand. All right, all of them in similar situations. You see that here. The pound New Zealand went in fact to the 50 fib. That too has a 272 target at around 207, I believe. Yeah, almost 206.5. And the Kiwi, the same thing. The same thing here. If we break these supports, we can fall to 174. Oh, 74, excuse me. Right at the confluence of these support levels right in here as well. All right, so those are the spaces regarding the Kiwi, Euro New Zealand, Pound New Zealand. Now I know that we can't trade it right now, which is a pity in a way, but always remember, patience is key. Wait for the trade to come to you, right? Well, that's not, yeah, patience is important, but actually what it all boils down to is waiting for the market to develop into a situation that meets your trading plan, and you're waiting for the market to evolve, and then you pounce on it. You're kind of like setting a trap for the market. You're not falling into a trap. So if you see price action movement and you see price moving and you think, oh, that's interesting, I want to trade it, and you jump in, you actually fell in a trap. If you plan a trade and you see the price doing what you're planning and then you take it, then you've actually anticipated the market beforehand. That's the type of trading that is profitable on the long term, of course. There's always losses here and there, but you know what I mean. Does that make sense? So what we're doing is planning the trades. Do you see what I mean? Right here it doesn't make sense. We're too close to support. Here, trading it would only make sense if we go for an intraday trade. For example, we would have used the 5-minute chart here. That could have made sense, because 5-minute chart or 50-minute chart makes sense because there's enough R2R towards that next support level. The next support level is around 77.30, no, higher, 78, 77.80, 77.60. So if we break this, we have that R2R towards the next support. So there were some intraday trades on that, but not swing trades. Dollar Swissy. Well, it's going to be interesting to see if the dollar Swissy can bounce here. We are in a triangle, as you can see. We're right at the bottom of the triangle with a support level just a bit lower as well. So wait and see mode. If we can bounce here, or are we going to break to the next support level? Okay, I'm going to wait for the EuroCAD to finish this hour. I'm going to let this candle finish, And if we've broken through this level, so once that finishes, I'll plan a retracement trade. The dollar CAD still hasn't broken that resistance. In fact, as you can see, still fighting against that. If you can sell pound yen, I wouldn't know. You see, the thing is that the pound yen has fallen so much. Where would you put your stop loss? I think the only thing you could use is even a 1 minute world. Your stop loss would have to be all the way here at 152.40-ish, 152.43. It's a 50 pip risk, even on the 1 minute world. And the next 4-hour support is 20 pips away from here. So you're risking 50 pips on a 1 minute world to gain 20 pips to the next support on the 4-hour world. What is the opinion of what is your opinion on that? Yep, cheat. And what do others think about that? Others think about that. Let's take a poll. Who find this an attractive balance? Who find this a good balance? Alex will take it. Yes. So, indeed, the answer is no. Not here, because the risk regarding, it's always a balance. Let me explain. Currency forex trading is always a question of, or probably every trading, is always a question of what are the odds versus the reward to risk, and what kind of risk is big, reward is small. We're always looking at what has a currency done so far and where's the next support resistance. Because the currency is moving and is in a trend, that's fine, but if there's a major resistance right in here, it won't break that, and it will retrace from that. So assuming right in here where I have the blue circle that will break that red line is a small probability. And especially if you then have a big risk and a small reward, then the odds of that trade don't make sense unless you zoom in a time frame and you find a combination that does make sense. But on this time frame, so you'll see often I say this is not good for swing trading, but it could be a good intraday trading, because if you zoom in, then you do get that balance. But here, if we zoom in all the way to the 1 minute world, it's just so massive movement that it wouldn't make sense. Now the only thing, as someone mentioned, is that if we break this level, for example, and you use a 4-hour stop loss in here and you target something in here, that makes more sense, because then you've cracked support, you've broken out of a support level, you're placing your stop loss at a position where the currency, if it retraces, it will probably not take you out, and you have that chance for the fall, and it's a good R2R. So that makes sense. That's a 4-hour trade. If you think the stop loss is too big, which I can understand, then the only thing we can do is wait for either a retrace or a break and retrace and a bear flag, for example, and take the next break. So either wait for the break and bear flag, or wait for the break and entry with a bigger stop loss. Now the waiting for the bear flag has the advantage is that the stop loss would be smaller. Does that make sense? Yeah, Pete. Don't get me wrong. These are good questions. So I hope you understand what I mean here. Do you see what I'm trying to explain? Okay, well, okay, great, perfect. So I'm not, how do you say it? I'm not biting down on you or something like that, or don't want to make you feel bad or something about that. But it was a good question. Just wanted to explain that everyone understands. Yeah, the Euro CAD is pushing through. It broke, and what I'm waiting for is I'm going to plan the retracement of this trade after this hour closes. So the only thing I'm waiting for now is a close of this 1 hour candle. And we have EU news, need 5 minutes. So we'll wait for the news, wait for this candle to close, and then I'm going to make that decision. That's all I'm waiting for now. So that's a few minutes from now. Otherwise, I'll just, the dollar CAD too, but it hasn't broken yet. That's the only thing. Otherwise, just a quick recap. Odd, looking for weakness, but especially below 88.50, even more weakness. I'm making a summary here just in case you're multitasking. On the chart, New Zealand definitely looking for weakness, but only upon the break of support and resistance against the Aussie, Aussie too even, but that's more a reversal trade. I mean against the Euro, pound, and dollar. Sorry. CAD, especially USD and Euro CAD, but also probably pound CAD would move, looking for weakness, and especially upon the break of those tops and bottoms. But probably both. Dollar. Will be interesting to see GU and Swissy Euro stuck in a triangle. Let's see if that breaks. Could break. And what else? Yeah, that's about it. Yeah, good. It's breaking. Now people who might be tempted to trade it, you could, but you need a stop loss all the way here to be very safe. All right. Now, I'm not looking for that. I would rather reduce my stop loss personally. And what I'll be looking for is a break and a bull flag. All right, as I already said, I think I said it, but I think I mentioned it for dollar New Zealand. But anyhow, that holds true for all of them: pound, New Zealand, euro, New Zealand, and New Zealand dollar. It's not a bad entry, I mean, but as long as the stop loss is correct. Otherwise, you're putting your stop loss at a risky place. Because the thing is that, it's a huge stop loss. So I'd rather wait for break and flag. The thing is that it broke, but at some point it's going to top out and then hook back. this, for example, was a small bull flag break, right? Right in here. That was a good trade up to the next resistance. That's a good 80 pip move up for an intraday trade, right? Let's take a look at the news. Should be out. Does anyone have the actual number already? Oh, thank you, Adrian. 1075. That should be positive, isn't it? Yeah, strength, okay. 1075, so slight increase. Very marginal though. Good for the EuroCAD though. At least it's not negative. So let's take a look at this. EuroCAD broke, but there's a pretty small wick here. Last hour, we have some volatility. That's probably volatility of the news event though. So I wouldn't read that much into it. It's just spiking up and down here. A few pips. All right, I'm just looking at this. You might wonder why I'm quiet, but just looking at where the break exactly happened. And I'm trying to decide which fib to take. Do I take the smaller one like this, or do I take the wider one like that? It depends where it broke. If it depends how you draw this trend line. So this is a bit grayish because if the trend line, if we got a break of this trend line, for example, the stop loss we could fib from here to here, and the stop loss would be pretty safe here. But this break, the trend line is iffy. We're not iffy, but it's a bit, could be better regarding the touches because we're not taking the full top here, for example. So that's the only thing I'm thinking of is where to put that stop loss. Because there's always the risk, of course. The risk with the trend trades is that you catch it or you try to enter at a spot maybe too close to a resistance, and that's actually where it turns down for a bigger retracement and then moves up. Right? That's always the primary risk of with the trend trades. Whereas the catching reversals risk, of course, is the fact that you don't catch it at the reversal at all, right? So So this Euro news is moving the market a bit to the downside, in fact. Maybe the dollar CAD for the moment is, yeah, maybe they expected better results in the day. Maybe the dollar CAD would be prudent as well, regarding the fact that we don't have a news announcement shaking it around, and it's breaking as well now, so that's good. So I'm going to put an order here on the dollar CAD. Oh. Let's see, this is the 15-minute world. I'm going to put a fib. Fib is difficult because it's just one straight up move. I'll fib the entire move up. Now there is a big resistance at 106.08, 106. So I don't want to aim beyond that because we could pause there. But if I aim for 105.88, that will give me a 3-to-1 R2R. So I'm going to plan a trade at 105.28. Should give me that 8 pip. You have to realize that there's a high likelihood it's going to give us an 8 pip retracement. Right? It's just at 105.36. So I'm just planning for those 8 pips. I hope the market will give me those few pips there, retracement, better. Otherwise I get very angry. And make that retracement and then bounce up to 105.88, which is a 60 target, and I'll put the stop loss at 07, which would give something like a 3-to-1 trade. Wow, euro dollar is breaking the triangle to the downside. So that, with this in mind, you see it's good we waited with that euro CAD. Because if the euro dollar is breaking down to the downside, it could be better to choose the dollar CAD instead of the euro CAD just in case. Well, see, it's good we waited because that downside, the momentum is totally changing the analysis here. So it's good we waited. We got downside. We could bounce here, I'm not saying, but clearly I'd rather take the dollar CAD out than the euro CAD. We're already, anticipating which one is better. So it's good we waited for that news announcement and the top of the hour. So, but the dollar CAD looks more stable, and I'm going to try this one. Let's see if it works. Hope so. Fingers crossed. Well, if this one doesn't work, I'll just take the dollar CAD, and at a later point, because the CAD weakness is going to play out, in my opinion. It's just a question of when, and not if, in my opinion. So, those are my 2 cents. That's the dollar CAD. And let's see how the odd USD plays out. Odd USD is still pushing down. So you see there's no guarantee we'll get the bounce. That's the thing. If you took the break, that's great because you're still in it. if you're planning on the retrace, sometimes it takes longer before you get that. That's always a risk. So, but eventually we are going to get a retrace. And I think that most likely the pullback would be good. Unless we bounce off the 886, the middle green level here, right in here, this one, where I have the light green circles, then I would want to see a confirmation of price action before taking the downside. All right? The reason is because 886 could be a bigger bouncing spot. Otherwise, I'm just waiting for this to finish as a swing trader before taking it down again. That holds true probably for the euro odd and pound odd as well. Let me take a look, as I already indicated. And also very interested upon the euro New Zealand, pound New Zealand, and New Zealand dollar. If we break the weekly resistances, make 1 hour corrections, and then break out. So the odd New Zealand trades could be very interesting today and tomorrow. We'll take a look at that tomorrow in our session again as well. And the dollar CAD is something that, you know, is likely to happen soon. Probably not, maybe not this hour, but next hour. If next hour retraces this hour, right? So I'm talking about next hour. If next hour retraces this hour, then it should find support somewhere there. If you want to be a bit more accommodative, you could put it 2 or 4 pips higher at 105.32. Depends also how big this hourly candle will turn out to be. If it's a massive hourly candle towering out like this, well then the likelihood of this entry maybe is smaller because it could retrace only back to maybe around 105.36, about halfway. If it's a smaller candle like this, then 105.28, there's a decent chance we'll get that. Another entry, as I said, if it's a really big candle, you could think about these tops in here as well, around 105, just above them, like 105, 105.33, 34 maybe. It depends how big the 1 hour candle is. At the moment, it's from high to low. It's 14 pips, which is still a small candle. If it's anything above 35, about 40 pips, this 1 hour candle right in here, then I'll probably move the entry order, I don't know, 4 to 6 pips higher. Because then, you know, the reward to risk is maybe a 2.5 to 1 instead of a 3 to 1. But otherwise, the chances of our entry order being hit are, you know, not big enough if we leave the entry order right there. Is this a guaranteed success? You never know. I mean, we've had a massive upside, a bit of correction. There's a very high statistical chance we're going to break this top. Very high. The question is not when or if, I mean not if, but when, sorry. Is that now? We don't know. We could make one more retrace and then bounce off the 382 instead of the 236. 236 is a very shallow fit. We're trading a break, basically a break after 236 bounce. Targeting the minus 272, but unfortunately there's bigger daily resistance in between, so going for a more conservative target here. All right. Doesn't have to mean though that we reach that target. We could go lower, then I'll try to take the trade there again and compensate that loss. Okay, nothing we can do about that. Looking at the fact though that we have a very high statistical probability of breaking this top, looking at the power and the impulse to the upside, there is a decent to up to good chance we'll do it right now. So I think it's worth the risk to take that trade as I've shown you here. But I have no guarantee it's going to work, all right? But I think it's worth the risk. So that wraps it up then, folks. I hope you got an idea what I'm looking for as a swing trader to happen. What kind of market movements do we want to see before I'm interested in trading it? You know, so that you can learn from that as well. Pound dollar is breaking the 4-hour bottom here, as I said, last week's low. So maybe some bearishness, but we still have to be careful of some support levels. We're not totally out of the woods yet for the downside, okay? Euro dollar did move out of the triangle as well. We'll have to see how far, though, because there's still horizontal support. Sorry about that. Still horizontal support close by here as well. All right. For the moment, there's some dollar strength kicking in the market. Here, too, the Swiss, we said it's at the bottom of the triangle. It could be a bouncing area, and it looks like it's doing that right now. So we'll have to see how much this dollar revival can last. As I said, the dollar is in a very difficult situation right now, tough spot. So we'll have to see what it can confirm to us in the next few days, or today and tomorrow. We'll revisit that question tomorrow morning again, of course, and look at all this Aussie CADs, New Zealand's and dollars once again. Okay. And maybe the euro and pound as well. We didn't focus on that much. Oh yeah, the pin bar strategy. Forgot about that. Yeah, we can do that. I'll maybe just explain you now the basics, and we can dive into any specific details you want to ask me tomorrow if you're there, or any other day. What it all boils down to is basically you want to use a day chart or 4-hour chart. And what you're looking for is at least a series of candles. I don't know. You're looking at, let's say, 5 to 8 you want. All right? Because you want to see, you need a swing high, swing low, basically. You want to have that pin bar at the top of a swing high, swing low. You don't want to have it in the middle of a range. So if we're ranging and you see a pin bar right in the middle after 2-3 candles, no. All right, you don't want that. If you however see a pin bar after a move up like this, a swing high, swing low, at the top of a range, or even at the top of a trend, doesn't matter, as long as we had a momentum, a move up, a series of candles, then that qualifies as the type of pin bar that we're looking for. Now, those have higher probabilities. What you're also looking for is preferably a big wick. I mean, the bigger the better. I mean, if you have something of 60% of the candle, it's good. 70% even better, right? What you're also looking for is a bearish close, preferably, or a opposite close. In the uptrend, you're looking for bearish. In the downtrend, you're looking for a bullish close. Those also help the odds. If it's a doji, it's okay. If it's still a slightly positive candle, ignore the wick. Even if it's a big wick, it's not the exact pin bar we're looking for. It's not the best opportunity. So this one has it. This one has a series of candles to the upside. This is the extra advantage that it's at the top of a range, but even a trend reversal would qualify. It has the bearish close. All right, so all these preconditions have been met, and you can either take it upon the break of the low, candle low, or upon, you can fib the candle itself and take a Fibonacci entry at any of the fibs, 382, 50, 618. Stop is always above the candle, opposite of the candle. And you can either target the next support, which is here, and you just made profit. You can target, of course, any of these fibs, or you can go, if it's a range, for the bottom of the range. If it's a trend, it would be more wisely to aim for the next support, because that's actually where the trend can resume again. So a bit more conservative there with the trending mode in your targets if you see a pin bar like that. So there are just some conditions that I want to see that are needed before I qualify or classify that pin bar as the optimum. Now there are other pin bars that might work fine, but if these conditions have been met, the stats are even more in our favor. That's it really. It's not that difficult. But the thing I'm really looking at is how the pin bar looks and what type of structure do we have before it, and sometimes even compared to it, like compared to the past. So if you have any questions, let me know. You can also let me know tomorrow or for Thursday for that matter, doesn't matter, right? So I'm going to round it up. I thank you so much for being here, and well, I'm looking forward to see you tomorrow or Thursday or even next week. Don't forget, tomorrow we're going to take a look at all types of trading. So we'll see what opportunities are there to be traded. Maybe there's a great swing trade. Maybe there's a great intra-trade. We'll see. Thursdays we're really going to focus on intraday trade and look a lot at the euro and pound and maybe any other intraday trades. All right. Yeah, sure, Predrag. No problem at all. You definitely could do that. I'd love to take a look at your charts, and we can do that right here in the room. Actually, that holds true for all of you. If anyone wants to show me something, please do. I'm all ears, okay? Alrighty. Because everyone has their own vision, and I think it's actually a good way to learn from each other, right? Abhishek has a long in the euro dollar, okay. Great. Good luck with that trade. Hope that works well. It's kind of breaking through a bit of that the support there, but I would be a bit scared of that trade. But you know, I don't know the parameters what you took it there. So, oh, you booked a loss. Okay, yeah, that's probably good. I mean, yeah, that's probably the wisest to step out now because it's looking like a breaking situation indeed. I wouldn't want to trade it because it's just has gone too much sideways for me. That's why. Alrighty. Okay, thanks for being here again, and well, wish you all good trading and a great day. Okay, cheers, everyone.
The